Okay, for this video, I wanted to address a common question I get, or common misconception rather, on S corporation taxation and passive income. So what I often get asked is someone will call and say, well, I read online that if my S corp generates too much passive income, I'm subject to tax directly on that income at the S corp level, and it could terminate my S election. And the answer is, well, that's technically true, but it only applies in limited circumstances. And so what I want to cover here is why that likely doesn't apply to you. Okay, so again, the common misconception is that if you have an S corp, you're limited to how much of the corporation's income can be derived from passive sources, right? So if you make too much passive income, so interest, dividends, rents, royalties, etc., you can effectively terminate your S election. Well, so let's get into the actual rules. So we're going to look at the passive income tax rules and the termination clauses. So an S corporation's gross receipts for a tax year cannot have passive investment income exceeding 25% of your total gross receipts. If you have an S corporation, or otherwise the S corp is going to be subject to tax directly on that net passive income. And if the S corp continues to have this net passive income for 3 consecutive years, the S corp election may terminate. And these are the relevant regulations here. So the passive income taxation under Treasury Reg 1.1375-1A, and then the termination issue. Now, under this Treasury Reg, what do we mean when we're talking about passive income? Well, passive income are your gross receipts derived from royalties, rents, dividends, interests, annuities, and gains from the sale or exchange from stock or securities, right? So if you're trading securities through your brokerage account, capital gains, that's a passive income. Okay, but here's the teaching point. What's the exception to this rule? The passive income tax only applies if an S corporation was previously taxed as a C corp and it has accumulated C corporation E&P, or earnings and profits, at the end of that given tax year. So in other words, if you have an S corp that's always been an S corp, it's impossible for this rule to apply to you. And that's because you were never taxed as a C corp and you don't have any accumulated earnings and profits that were earned while you were a C corporation. And so that's what I always have to tell individuals that call me over the phone and they say, well, what about this passive income rule? It's like, well, look, you were an S corp from day one, so this doesn't apply to you. So let's look at 2 examples here just to illustrate this point. So here's an example of no tax being an issue. John forms a Delaware LLC in June, and he files the 2553 to elect S corp status effective the same date, so the day of inception. Then he opens a brokerage account and he invests in dividend-paying stocks and bonds, through the LLC. So he opened a brokerage account in the S corp name and tax ID number. So the S corporation generates $4,000 in gross income during the year. He had $500 that John earned as a consulting fee, and then he earned $3,000 in dividends and $500 in interest income through that brokerage account. So the amount of passive net investment income generated is 87.5% of the gross receipts, right? So $3,500 in investment income divided by $4,000. So clearly over the 25% limit, right? But because this entity was never a C corp and it doesn't have any C corp accumulated E&P, this passive income tax rule doesn't apply. Okay, and you can find these rules in this regulation here. So if you jump to this Treasury Reg, you can find this rule that outlines the passive income limitation. And it clearly states in there that this does not apply if you're an S corporation that doesn't have any prior E&P from when it was previously a C corp. Okay, so let's look at an example where it could be a problem. So Jack and Jill form a Delaware Corp in 2018. They leave the default classification, right? So it's a C corp for several years, and then they decide that they want to make an S election effective Jan 1, 2020. Now, on the date they make that election, the C corporation has accumulated E&P, which is effectively the retained earnings that haven't been distributed as a dividend. So accumulated E&P of $600K. Now, if after the S election is approved, Jack and Jill decide to invest company assets in passive income streams, they could have this issue with the passive income tax and a potential S election termination if the passive income exceeds 25% of the revenue. And that's because it was previously C Corp. It has $600K of accumulated E&P that hasn't been distributed out. And so now they need to be mindful of these kind of rules. So what can they do to cure this issue? Well, they can get rid of the E&P, right? They can distribute a dividend to the owners, pay the tax at the shareholder level for the $600K, and then that cures the issue, right? Now they can go forward having passive income streams without jeopardizing the S election and without having to pay the passive income tax at the entity level. So yeah, that covers it. I hope that was helpful. Again, if you come across this passive income tax issue for S corps, it really only applies to entities that were previously C corps and have the C&P. If you form an entity and then the day one you make that S corp election, you were never taxed as a C corp, this is not a problem for you, right? You do not need to worry about this kind of tax. So yeah, again, I hope that was helpful. Thanks for sticking with me here to the end. If you have any questions, please leave me a comment below. And I look forward to seeing you again soon. Thank you.